All right, let me introduce Troy Fullwood. He's an expert in his field. There you go. He's an expert in his field with over 22 years' experience in the industry. Troy founded Pinnacle Investments in 1996, which has grown to be one of the nation's leaders in the purchase of first lien performing and non-performing real estate notes. Troy is recognized as one of the industry's top investment professionals and is often asked to speak at financial conferences and companies such as Harvard Business, Investor Wealth, NASDAQ, and Peak Potentials. He also contributes his ideas on real estate investing through numerous published articles and radio talk show interviews. Troy has received multiple awards throughout his career, including being voted the 2015 Best Mortgage Investor USA by Wealth and Finance International and Best of the Best in Finance by Acquisition International in 2016 and 2017. When he is not working, Troy is active in his church and assists his community and financial issues. Please welcome Troy Fullwood, everybody.
I'm not an attorney. I don't even play one on TV. And I'm not giving any kind of legal advice at all tonight. What I'm here to do is to basically provide you guys with some educational aspects of what we do in the institutional space and how we raise capital. Is everybody okay with that? 23 years ago, I was a landscaper in Phoenix, Arizona. It was one of those hot jobs. We dug a lot of holes, we dug a lot of ditches, and we planted a lot of trees. With that being said, I decided one day I just didn't want to do that anymore. And because I didn't want to do it anymore, I went out looking for something to do that was different than landscaping. But I knew really quickly that I didn't want to do fix and flip. I didn't want to do rentals. I didn't want to do anything of that nature, primarily because fix and flipping required you to paint houses and fix up houses. Part of growing up as a kid for me was occasionally at school I would get suspended. So if you've ever been down that road, my parents were okay with me getting suspended because I would oftentimes have to paint portions of the house, AKA bedrooms, outside, inside, things of that nature. So painting connected automatically to fixing and flipping, and that was something I had no interest in doing whatsoever. I'm completely grateful, though, that my sister married a custom home painter. So I have that covered now as an adult whenever I need painting done. But with that being said, I started out getting involved in what's called the real estate note space. I started looking around at real estate. I didn't see that the fix and flip was something for me, but I wanted to be in real estate. So I picked notes. The reason I picked notes was really simple. The people that create loans and notes, things of that nature, are typically banks and institutions, correct? They also seem to always have the tallest building in every single city and every single metroplex in the country, which to me was rather impressive. So I wanted to figure out what they were doing. If I was going to put in the time, money, and the energy to learn something, why not go and learn what the big guys are doing? And then just copy that model, put it into play. Well, with that being said, I started wholesaling notes. I would go out and find notes. I would wholesale them to a company here in Irving, Texas called the Associates Financial Services. Unfortunately, they're no longer with us because Sandy Weil from Citicorp came in and bought them out from Ford Motor Corporation, and he dissolved the private note sector, but that's okay. We went on to do other things. Point being is that I started wholesaling notes. 3 years into that journey, I went out and started raising capital. Now, we didn't have private money players in the space like there are nowadays. The private money players were typically people that were mom and pops, friends and family, but they had like $50,000 to $100,000. That was not enough money for me to go out and start buying notes and holding them and building portfolios. So I went out and raised $1 million. I raised it from a bank who gave me a line of credit that I was able to buy first lien performing residential notes, and I put them on the line of credit. The numbers work out really well when you're buying notes at a discount for banks and institutions to extend lines of credit because it puts their risk very, very low, their investment to value risk. That's how I got introduced to institutional money. Now, because I got introduced to it, that's just where I stayed. The private sector I know has grown dramatically over the last, I would say, 10 years as a whole. And there's a lot of great companies out there like Quest and other companies that are really helping people put their money to work. 20 years ago, that wasn't the case. People were wandering around. Their idea of putting money to work was their 401k at their job and give it off to Wall Street and let them do their thing. Well, that blew up in their face in 2007, hence why private money has probably grown in popularity because people are taking control over their financial future versus just handing it off to Wall Street. So my first capital raise was $1 million. I started buying notes. That capital got bigger and bigger over the period of time, and ultimately got into the distressed debt space. Myself and 2 partners we built the first distressed asset fund on Wall Street back in 2007. We modeled it out. We raised $30 million in 2007, and then we proved out the model to Wall Street. Hence, at that point in time, then we sold the model to Wall Street, and that's where, I say, loan modifications and things like that came from, is the work that we did. That being said, we've stayed in the space of building and raising institutional capital to the point where last year we raised 10 figures. So we raised $2.5 billion from 2 Wall Street funds, and we raised $400 million from 4 private equity funds for our clients and for ourselves. Now, we built a velocity model around that. Our velocity model is very straightforward. We still buy NPLs. We comb through the NPLs. We modify as many of them as we can in a 60-day period. We hold on to those. We sell the rest. We're not in the foreclosure business. We've never been in the foreclosure business. The burn rate on capital in the foreclosure side of it is astronomical, and people don't oftentimes think about that side of it. Burn rate on capital is how fast you spend money. Anybody married here? Just wanted to bring it down to a relatable level. With that being said, there's a photograph of me there at the New York Stock Exchange. We have relationships there where we are tied into, so we're constantly doing what we do. I'm not trying to be vague about things. I'm just trying to communicate in a way where I want to see people in this room tonight, like, grab a hold of this and go for it. Okay, that's what I want people to do. And here's what I learned. When I started raising institutional money, there was a really simple rule that was kind of, put upon me. That Wall Street's always been there, and Wall Street will always be there. The question is, are you going to go there? Because they're not going to come to you. You have to level up and go to them. There's not a person in this room that can't do what I did. I just started 22 years ago and just slowly started chipping away at it, and I broke down walls of fear and things of that nature, which oftentimes people will carry around because they, quote unquote, don't like the banks. Wall Street's the bad guy. Wall Street's the enemy. It's us against them. Well, I can tell you it's not us against them. Yeah, they've done some things that I don't necessarily agree with, and there's some things that happened during the recession that they got some bailout money. You know, they have these opportunity fund zones, which are kind of like mini bailout money games that they've now put around the country. The point being is that oftentimes we'll take up those kinds of ideas, and that keeps us from going there and doing what it is we really want to do. The only difference between all of you in this room and myself included and Warren Buffett is he just trades his time for a larger dollar amount. That's it. That's it. He's a bright man, but he wasn't bright when he started. He bought a furniture store, and then it grew into Berkshire Hathaway, and then it just kept growing from there. He didn't start where he's at. That was my journey to Wall Street with a few bumps along the way. What is institutional money? Easily explained, it's borrowing money from the following institutions: banks, hedge funds, endowments, insurance companies, pension plans, Wall Street REITs, and family offices. Here's a great intro into institutional money. Family offices are private equity funds that manage very wealthy families' money around the world, all over the world. There's 20,000 family offices around the world. And what they're doing is they'll appoint a hedge fund manager or a private equity fund manager. Sometimes there's hedge funds, sometimes there's private equity funds. They'll appoint somebody, and then that family will give them $2 billion, $3 billion, $4 billion, $5 billion to now go and deploy into various industries. Sometimes it's tech, sometimes it's medical, sometimes it's pharmaceutical, sometimes it's development, sometimes it's hospitality, sometimes it's SFR, sometimes it's debt. See my point? And that's all based on the marching orders of the family. That's the way all of these work. And the reason I share that with you is it's key to, matching yourself up with the right money. Oftentimes people will call me and they'll say, Troy, I tried to pitch this group and they didn't take my deal and I can't figure out why. And then I'll research the group and I'm like, they have zero interest in real estate. They're about medical. They're about technology. They're about everything but real estate. So of course they're going to tell you no. And then the person can't figure it out. So they're not matching themselves up right. That's a good portion of what creates success in the institutional space. So family offices are a great place to raise capital. One, because they're very approachable. When you get into the Wall Street players, that's a whole nother game at the end of the day. That's a whole nother game. It's not a game that can't be accomplished or taken over or, how do you say, win at, but it's a completely different game. You have to have a track record. You have to have a team in place. You have to have certain things around you. You have to spend money. The first time we raised $30 million, it cost me $185,000 just in legal work to put the fund together. Just in legal work. 185 grand. Who would spend 185 grand to have access to 30 million? Yeah, every one of you. Absolutely. So to me, it was a good play. But when you look at putting together funds today, you can put them together for $40,000, $50,000 all day long. Start with the end in mind. I say this because oftentimes people come to me and they'll say, Troy, I just heard this great presentation on real estate, and I'm going to get into real estate now, and I'm so excited, and I just can't wait to get started. I'm like, that's fantastic. What's your plan? Well, I don't know. I'm going to keep reading some blogs, and I'm going to keep listening to some YouTube things. Okay, cool. And there's nothing wrong with that. But after you've listened to all that, figure out what your lane is. Like I had to figure out what my lane is. I knew from childhood experiences, what I would refer to as childhood abuse, that I did not want to paint. And rehabbing houses was part of painting. And I didn't want to do that. Or painting was part of rehabbing houses. I didn't want to do that. So that was immediately off the list. I didn't care if you were making $50,000 a day rehabbing houses. I had zero interest in that whatsoever. My wife today is like, can we go and buy a house and rehab it? I'm like, we? You can do that. And now she's like jumping for joy because her parents just bought a house last Friday and they want to remodel it. And I'm like, sweetie, have fun. She's like, do you want to help? And I'm like, no, I'm going to Dallas. So the beauty of it is that always work with the end in mind. It doesn't matter what you want to do in this space. There's so much opportunity. And you may be standing there right now or sitting there right now going, I don't know where that's at. I don't know what that looks like. Great, you're on step one. I didn't know what notes looked like when I started. I couldn't tell you the difference between a note and a deed of trust if it hit me upside the head. I had to figure it out. But I knew that was the direction I wanted to go because the biggest buildings in the city were banks. I'm like, they got the money. That's what I want. Do you realize that banks could put every single one of you out of business today? You want to know why they don't? Simple. They don't like rehabbing. If you don't believe me, look at their REO list. When you buy a house from off of an REO list from a bank, what do? Minimal cleanup. That's really about it. They might fix a few little things, but that's not their gig. They'd much rather just deploy capital, collect their payment, let you go and do whatever you want to do, which is actually a brilliant model, by the way. Don't get me wrong, I'm not beating up on the model. I'm just telling you the difference between the two. And they let you go out and earn your living that way. And they're more than happy to collect your money. And then when you sell the house and make $50,000, $60,000, $80,000, $100,000, or you build up an equity position in properties, you get to keep that as long as you make your payments. To give you an idea how big the banking industry is, in the mortgage side of it, just in the lending side of it, and you can look it on, you can go to like gov.gov or one of those sites, and it's a $10 trillion industry. Just residential mortgage lending, $10 trillion. The seller finance side of the business is a $1.7 trillion industry. Right now, the NPL space, which is non-performing loan space, there's currently about 400 million in shadow inventory that they're not even talking about right now, that they're slowly siphoning out or draining out into various buyers in the marketplace. The REO space is about 2 billion. And you see people all day long making tons of money in the REO space, right? Some of you are like, no, I haven't found a deal yet. It's out there. It truly is. So start with the end in mind. Work backwards. Build your model in the form of a pitch deck, aka prospectus. How many of you are great writers in here? How many of you don't like writing? I'll raise my hand on that group. So when I wrote my pitch deck, I basically went through, I outlined my pitch deck, and I then gave it to somebody to clean it up and write it better than I could. Here's what you want to put in your pitch deck. You want to identify the problem. What's the problem? We talked about, just before I got up here, you guys showing statistically what's the trends in the DFW area compared to other areas of the country. You may be, say, outside of Charlotte, North Carolina, and you see that there's an opportunity there. So you identify the problem. Then you back it up with statistics. Then you come in and you solve the problem. How are you going to solve it versus somebody else? So solve the problem. How are you going to solve the problem? What makes you better than the next person? Want to know what makes you better? One thing, action. That's it, really. I want to touch on something right there. There's this team here in Dallas called the Dallas Cowboys. Now, I'm not here to pick on Dallas Cowboys, but here's what's going to happen come August. These guys are starting to practice. They're going to be doing their two-a-days in June and July, and they're going to start strength training, all those things. As a matter of fact, every NFL team in the country is going to be doing the same thing. And they're going to be focusing on this playbook that they have. And everybody's going to be learning the plays. They're going to be perfecting the plays. Then they're going to go out on Sunday afternoon, and they're going to be playing their opponent. And they're going to line up for whatever play that the quarterback just called. And the minute they snap the ball, the play is a broken play. Every single one of them is. Now, that's not a characteristic of Dallas being a bad team. Because guess what? The defensive team, they've got a broken play too. But at the end of the day, they still figure out a way to advance the ball down the road. That's real estate. You put together your perfect little business plan, your perfect numbers, calculations, you buy the house. Next thing you realize, there's a termite problem. There's a pier and beam problem. You got to put on a new roof all of a sudden. You got to change out the electrical, the plumbing, things of that nature. That ever happened to anybody in here? Yeah. Same thing with us in notes. We'll buy a note, the payer's paying great for 2 years before I buy it, 6 months after I buy it, they quit paying. Now I got to contend with that. That's a broken play in our business. But it doesn't stop us from building our business. We just overcome that. That's what entrepreneurs do. That's what entrepreneurs do. Outline the risk versus reward. The number one thing that I see in people's business plans is they don't want to talk about the bad side of the business. That's a big red flag for institutional money. If all you're doing is telling them all the great stuff and that you're going to run a perfect game and a perfect show and a perfect business, they will pick up on that very quickly. So you have to tell them what's the downside, what's the risk. And when this happens, here's what I'm going to do. AKA quarterback, Dallas Cowboys, Sunday afternoon. When this play is broken, here's what I'm going to do. Here's my plan B to advance the ball. Positioning analysis. How are you going to position yourself in the market? Who's your competition? What are they doing versus what you're doing? Case studies. Do you have case studies? Put some case studies in there. Even the ones that lost you money. If you lost money but you still paid back your investors, that's a credit. That's speaking to your character. They want to see that. Hey, this is one that, man, we just missed the boat altogether here. And talk about that. And then your team. Who's your team? Your team should consist of you, any business partners, legal counsel, accountants, title companies, appraisers, just to name a few. You should have their picture, their bio in there. You can add one more, testimonials from people that you've done business with, character references in there as a whole. When you put it all together and it's rough and it's kind of bulky and stuff like that, then send it to somebody to work their magic. Go to Fiverr, go to iWriter.com. Pay somebody $200, $300, $400. You're trying to raise $1 million, and if you're tight-fisted about $200, you just shot yourself. Does that make sense? Everybody good over there? All right. Then use the prospectus to build out an executive summary, okay? A prospectus will be probably anywhere between 10 to 20 pages long. They can go longer, they don't need to be. But then come in and do an executive summary. In other words, highlight things. Why do I say to highlight things? Because that's what you're going to lead with when you're raising capital and you're talking to potential investors. They don't want to read your 20, 30, 40-page business plan unless they're interested in you and what you're talking about. Anybody ever had to listen to somebody they're not really interested in? Not me, of course, but somebody else. Yeah. The same thing. These are folks that are operating and they're controlling and overseeing billions and billions of dollars a day in transactions. And if you can't summarize things for them and bullet point things for them to get their attention, to see if they're even interested in it, then they'll just say no. And it's not because you did a poor job in writing your business plan, it's because they don't have the time. that make sense? All right. 3 to 5 pages. Raising capital is 10% data and 90% relationship. Okay? Now, I just talked about the mechanics of this, the mechanics of putting something together. And that's oftentimes what people want to talk about. They want to talk about how to actually do this. What does this look like? Well, if I went into the nitty-gritty of building out a business plan, it would literally be like a 3-day workshop and hitting on all the different points. And I'm not saying that to take something from you. I'm just saying that we can get real granular in that. But I wanted to spend this time, this limited time that we have together, and focus more on what I have seen to be the biggest asset in raising capital. Last year, I raised $1 billion driving down the Pacific Coast Highway in a Ferrari. No kidding. No kidding. A dear friend of mine, he's the #1 private wealth manager at Morgan Stanley. I was in Dana Point speaking, and he knew, I texted him, I said, hey, I'm in town. He's like, great, let's do lunch. I said, great. So he comes and picks me up at the hotel in his Ferrari. He was dressed in a baseball hat, flip-flops, shorts, and a t-shirt. His office, his home office is in Boston. He lives in Dana Point, California. He lives on a 10-acre ranch. His, hobby is growing fruit trees and working in his yard. He's about 38 years old, so he's young. Graduated from Harvard and MIT. Just a brilliant mind and just down to earth. His wife is one of those international Pilates instructor things, does her thing. Point being is that when we were driving down the PCH, headed to go have fish tacos, real gourmet lunch there. See, and I share that with you guys because oftentimes people think we got to go to like Morton's or Bob's Steakhouse or something like that to impress. These guys don't give a flying rat's behind about that stuff. They just don't. They want to see who they're dealing with. They want to know, like, and trust you. That's what they want. Does that make sense? So as we're driving down the PCH, I tell them what I just did 2 weeks earlier. And I raised $1.5 billion from Goldman Sachs. And they said, well, I want in on that deal. I said, well, what are you talking about? He says, I got $12 billion sitting on the sidelines right now. I've got to put it in play. I'll give you $1 billion of it to go play. I said, well, do you get along with Goldman Sachs? Because I don't have time to referee any adolescent behavior. And this is how we're having this conversation, like him and I, like just straight up. And he says, yeah, we get along great. We've got a lot of deals going on. I said, perfect. He goes, what's your term sheet with Goldman? I said, are you going to match it or are you going to beat it? He goes, I'll match it. I said, okay, it's a good term sheet. He says, send it over to me. We'll write one up. Within the matter of a 20-minute drive to go get fish tacos for $9.97, which I paid for, by the way. I figured it was only fair being so he drove, type thing. Going back to like dating days and stuff like that. And we put it together because it was all about the relationship. I spend every Christmas anywhere between $5,000 to $10,000 on Christmas gifts going out to my Rolodex of people, my very close Rolodex of people. Why? Because it maintains the relationship as a whole. I know exactly what every single one of the people that I'm in a relationship with Wall Street, what they like. You saw the picture of me on New York Stock Exchange. My friend is the vice president of the New York Stock Exchange. When I go to New York, I'll oftentimes ring him up and we'll go do breakfast inside the restaurant inside of the New York Stock Exchange. And we'll sit down and chat. You want to know what we talk about? His 19-year-old son who he can't get off the couch to go to work. And even though he offers to pay him $50 an hour cash, he can't figure out how to motivate him. And we talk about that because I've got 4 boys. And so we talk about those types of things. His hobby is buying houses that were damaged by Hurricane Sandy and fixing them up and selling them. He also happens to own a whiskey company that I invested in, even though I don't drink. I've never tasted his whiskey. I've sat there and watched him drink it, but I invested in it with him. From what I understand, it's pretty good. But it's all about that relationship. It's all about that connection. See, because if I can connect at that level, the real personal level, then when I need something or he needs something from me, we have each other on speed dial on our cell phones. My cell phone is worth no less than $10 billion. No less. So don't even try and take it, because I will tackle you so fast. And I say that because that's the value of the relationships. Does that make sense? I have a very small circle. My circle's small because my circle's strong. I don't have a big circle. Does that make sense? Build your circle. And then once you build it, then go build another one on top of that. And then build another one on top of that. Keep scaling up. And then the people that want to go with you, bring them up with you. People that want to go in a different direction, pray for them and wish them the best. But keep that relationship aspect alive and well, even if it's just text messaging. A friend of mine who runs the trade desk at Morgan Stanley, another friend, he happens to be a U of A graduate. I'm an ASU dropout. I lasted one semester at ASU. And I wrote a case study for a business management teacher, and the business management teacher gave me an F on the case study because they said it wasn't textbook. I said, no, it's called real world. There's a difference. And he wouldn't change the grade, and he wanted to hold me to that. And at the time, I was working in the landscaping business, and my client base was all, because it's a luxury item. At the time, it was a luxury item. My clients were entrepreneurs. They were business owners. And I was getting constantly mentored by them. And so when this $60,000 a year professor told me I didn't do a good job, but I've got $1 million entrepreneurs speaking into me, I knew that it was time to go the other direction. And I did that not because the professor was doing anything wrong or poor or anything like that. It was that I was never going to learn how to be successful in business by being taught by a $60,000 a year professor. Now, if you guys are teachers in here, don't get me wrong, I love teachers. My mom was a teacher for years. She's an entrepreneur nowadays. She's got 4 college degrees. My dad has 0 college degrees. I've asked my dad several times, why didn't you go to college? He says, because they don't teach common sense in college. So I've got the best of both worlds. So make sure that you build those relationships. Build the relationship before you ask them for something. How many of you hate it when somebody calls you and they haven't talked to you in 6 months, and now all of a sudden they need something? They didn't even send you a Christmas card. And now all of a sudden there's an emergency that you got to go and help them. You see the connection? Yeah, that's the connection. That's your $1 million connection. When you can dial that in, that'll open up doors like you wouldn't believe. Bring value to them first. Reverse engineer the relationship. I don't ever ask anybody on Wall Street for money unless I bring value first. What's value? Well, the first time I started going after the Wall Street guys, I started asking them what it was they wanted. Like, what are they investing in? Well, we're looking for apartment complexes. What kind of apartment complexes? Well, we've got all this money to spend. We need big apartment complexes. Great. So I started looking for apartment complexes, medical centers, hospitals, shopping centers, development projects, and things of that nature. And I would just send them to them. Hey guys, I found this apartment complex. I think it'll work well in your matrix. Here's the contact information for the seller. Let me know if you need any other help. You guys see what I just did? I took myself out of the deal. I didn't care about getting paid. I didn't care about getting a $10,000 check or a $100,000 check. I'm playing for $500 million. You can keep your 100 grand. Give me my 500 million. Give me my 50 million. Give me my 30 million. You want to know how we lined up the 30 million? That particular company one of their focuses was lease agreements on cargo ships and oil tankers. So I went out and I found them some cargo ships and oil tankers that they could buy and lease out to other industries, that was their model. But the two head guys of the firm, they were hard money lenders back in their, lending days, which were like 10 years earlier. So they understood the model. And they were very, forward-thinking people. So I went out and made them money first, and then I asked them for money second. Make sense? Yeah. Reverse engineer your efforts. Who cares about the commission? Who cares about the 10 grand? Who cares about the 20 grand? Who cares about it? If you're playing at a bigger level, it doesn't matter. It shouldn't matter. But oftentimes people will get so focused on that 20 grand that that's all they ever make. You know how many calls I take from people that want something but don't give anything? Zero. If I get on the phone with somebody and they're asking and asking and asking and taking and taking and taking, I introduce them to this person in my office called Tone. He's a pretty quiet guy, but he sure sends a pretty clear message. Click. Why? Because it's not a healthy relationship. It's not a healthy relationship. That makes sense? Yeah. Well, guess what? All the guys on Wall Street, they get that. They learned that years ago. So if you're just coming in and taking, and you're not giving anything, they're just like, they'll quit taking your calls. And that all of a sudden just shuts down your floodgates. So lead with value first. Start marketing to institutions that match up with your idea. Say commercial to commercial. Institutions that invest in commercial, if you're interested in commercial, it's a match. If you're in a multifamily and they're lending on multifamily or they're putting together funds and capital, it's a match. If they're in SFR and you're in SFR, it's a match. But the biggest mistake most people do is they don't go and take time to find out what that institution's doing. You know that not all banks lend on real estate? Out of the 7,800 banks in this country, yes, there's 7,800 of them in this country. And I'm not talking locations. I'm talking B of A would be 1. Wells would be 2. 7,800 different banks around the country. They all have their own unique management style and their portfolio focus. And if you're talking to a bank and you're trying to get money out of them and they're not interested in real estate because they're more SBA lenders or maybe they're student loan lenders, whatever it may be, that's their niche because that's the management team's characteristics and that's what they put together, that's what they raise capital based on, then you're just beating your head against the door. But here's what often happens. People will go and do that, and then they'll give up. Well, they don't give up. You're just knocking on the wrong door. Does that make sense? All right. You guys good? Nobody falling asleep? All right. Now's the time to market your opportunity to the institutions. Institutions in general, like I said, you've got to have that connection. And keep in mind that some of you that are dealing in smaller markets that have like community banks and stuff like that, build relationships with those bankers. How many of you have ever taken a banker to lunch or breakfast? Okay. Yeah. So like 2% of the room, 3% of the room. The rest of you are missing out on huge opportunities. Huge opportunities. And you don't even know what you're missing. How many of you have a personal banker that calls up and then watches your money for you? Yeah. That's pretty cool stuff, isn't it? Yeah. Yeah, because you built the relationships. You put the time in. Guess what it takes to do that? A lunch or two. You're eating lunch anyways. You're eating breakfast anyways. They want to know who their clientele is, but they're not necessarily going to pursue you. You have to pursue them. So buy them a hot dog, buy them a slice of pizza, whatever it is they want to do. Go do that. and then be loyal to them, because they'll be loyal to you. You have a mistake in your account gets, whacked. I've had things where wires have gone out and wires didn't come in and this is happening, that's happening. No big deal. They cover it. They make sure things go right. I had bankers leave locations, and all of a sudden I walk in there and now there's a new banker. I'm like, where's Russ? He's like, well, Russ got moved over here. I'm like, good, here's what I need to do, this, this, and this. And he's like, well, I need to kind of think about this. I'm like, call Russ, he'll take care of it. Or tell me where Russ is at, and I'll go over there and get it handled. Next thing you know, 20 minutes later, it's handled. Are we almost wrapping up here, Jason? 4 minutes? Awesome. So if you need a list of institutional investors, we maintain one of about 900. We can chat after the event. Using family offices platform is a great place to start raising capital. Okay, here's their website, www.familyoffices.com. Richard runs it. You want me in the picture? Or I can just like do this. Go out to familyoffices.com. Richard runs that whole monster. And matter of fact, they are having an event here in Dallas this weekend or next weekend on capital raising. Pretty cool stuff. They have like 9, 10 events all over the country. If you want to get a hold of me, you can email me at troy@pinnacleinvestments.com. Call our office at 480-831-5067. FYI, if you send me an email and I don't respond within 48 hours, I did not get it. Just being really clear. We have filters on our email systems which cut down on the junk email. Any of you guys get junk email? Okay, so if I didn't respond in 48 hours, I didn't get it. That's my story, so I'm sticking to that. But actually, if you send one, you'll get a spam arrest. You need to click on the link. It'll go through, blah, 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 that kind of stuff. All right, it's not that I'm ignoring you. It's not that I'm being, don't like you kind of thing. It's just what it is. All right? Good?
Can we get a big round of applause for Troy? Can we get you for 1 or 2 questions?
Yeah.
Anybody got 1 or 2 questions out there?
Yes, sir. Like when you say partnership, like you and a business partner going out to raise capital together? Oh, I can tell you the good, the bad, and the ugly. So the ugly part, I'll start there. I had an old business partner. Actually, it was on the first fund that we did. And about 6 months into the business relationship, I found out that his cousin was Jeffrey Dahmer. Boy, a few of you have been watching the news. So that was a big, So even doing a background check on him, which we all did as a partner, which I would recommend. If you're going into business with somebody, just get it out of the way. Hire a company, do a background check on each of you, and share. And get the skeletons out of the closet. We all have them. We've all made mistakes. We've all grown up. We've all matured, yada, yada, yada. At the end of the day, do those types of things. Make sure that you and your partners always have a synergy and that you're wanting to go in the same direction. If you don't, like case in point, you have somebody that's really good at data or really good at, calculating things, but they don't want to really grow the company. They just want to get to like 10 million or something like that, and that's their comfort zone. Pushing them beyond that is going to be like pushing a rope up a hill. So make sure that you take time to do that before you get in business with them, because they'll tie up your assets and legal fees and stuff like that. One more?
Been associated with Troy for several years. Came from some other people that we both know together. And all I can say is the Troy you see right here is the Troy that there is. If you ask him a question or you come to him with something and he isn't behind it or he thinks it's stupid, he's going to tell you that. He's not going to be something about, well, no, now I've got this other course, you need to buy that so you know the answer to that. But the Troy you see right here is the Troy there is. And like I say, if you can't stand somebody telling you the straight skinny, don't talk to Troy.
And on that real quick, just
Thanks,
because Tommy and I were talking about this in the studio earlier. It's like, you know, he is so sweet and so nice and so fun and so loving. It's like, when you got access to that many billions of dollars, you'd probably be nice and sweet and fun too, right? I don't think I would have 2 cares in the world. It's like, how much money I got? Did y'all have a question?
Is there another question here?
Any questions? Cool.
Everybody good? All right, guys, thank you so much. I appreciate it.
All right. Excellent job.